Silver just dropped 3% in 3 days. Now, most people are panicking, but the smart money? They're watching one specific price level very, very closely. And by the end of this video, you'll know exactly what that level is and what it means for your money. Quick reminder before we dive in. Everything we talk about here is for educational purposes only. I'm sharing my personal analysis, but this is not financial advice. Always do your own research. Okay, so here's what we're going to cover today. Number 1, where silver is right now and why it dropped. Number 2, the exact technical levels every serious trader is watching. And number 3, the longer-term picture, because this is where it gets really interesting. Stick around, because I'm going to save the most important insight for the end of this video, and it's the one thing most analysts are completely missing right now. Where is silver right now? So, as of this morning, March 13th, 2026, silver is trading at around $82.64 per troy ounce. That's down roughly 1.3% just today. And if you zoom out a little, we're looking at about a 2 to 3% pullback from yesterday's close, which was sitting near $85. Now, 3 straight sessions of losses, that's enough to make anyone nervous. But before you do anything, let me give you the full picture. Here's the thing most financial news won't tell you. Silver has gone from about $31 in January 2025 to over $82 today. That's nearly a 160% gain in just over a year. So yes, we're seeing a dip, but we're dipping from extraordinary heights. A 3% pullback after a 160% run is not a crisis. It's called breathing. Why did silver drop? So what's actually driving this sell-off? Let's break it down, and it's not as complicated as you might think. The US dollar is strengthening, and precious metals, silver, gold, all of it, they move inversely to the dollar. When the dollar goes up, silver typically goes down. Simple as that. But why is the dollar strengthening right now? 2 words: Middle East tensions. Rising geopolitical risk is pushing oil prices up, which feeds inflation fears, which reduces the market's expectations that the Federal Reserve will cut interest rates anytime soon. No rate cuts equals stronger dollar equals weaker silver. That's the chain reaction we're seeing play out right now. Now, you might be thinking, wait, shouldn't geopolitical uncertainty push people into safe haven assets like silver? And you'd be right to ask that. The answer is yes, but in this case, the dollar's strength is overpowering that safe haven demand, at least for now. The technical picture. All right, let's get into the chart, because this is where it gets really useful for anyone actually trading or investing in silver. First, the big picture. Silver has been compressing inside a broad trading range between 75 and 92. Some analysts are calling this a classic cup and handle formation, which, if you're not familiar, is actually a very bullish pattern. It suggests the market is accumulating before a big move higher. Others are framing it as a wave 4 corrective triangle in Elliott wave terms, which again points to one more leg up once this consolidation completes. But let's talk about the specific levels you need to know right now. Immediate support, $82.20 to $83. This is your short-term demand zone. If silver holds here, bulls are still in control. Major support, $80. This is the big one, psychologically significant, and it lines up with the 50-day exponential moving average. If silver drops below $80, things get more complicated. Resistance, $84.50 to $86.20. That's the near-term ceiling silver needs to break through to build momentum again. Beyond that, $88 to $90. A clean break above $90 could trigger a very fast move toward 92 and potentially 100. On the technical indicators, the RSI is sitting around 50 to 55 on the daily chart. That's neutral territory, not overbought, not oversold. The market is literally at a crossroads right now. Quick pause. If you're finding this breakdown useful, hit that like button. It genuinely helps other investors find this content, and we drop updates like this every week. Now, let's talk about what I think is the most important part of this whole story. Now let's move towards the bigger picture. Here's what nobody's talking about in the mainstream financial press right now. Silver isn't just a precious metal anymore. It's an industrial metal, and demand for it is absolutely surging. We're talking about electric vehicles, solar panels, and yes, even AI infrastructure. Every single one of those industries consumes silver at scale. At the same time, look at supply. The Shanghai Gold Exchange physically lost 73 tons of silver inventory just over the past week. That's significant. That's the physical market tightening even while paper prices pull back. On the corporate side, Hecla Mining just reported record revenue and profitability from silver operations. Idaho Strategic Resources leased a new copper-silver project in Idaho. These aren't the moves of companies that think the silver story is over. And here's the longer-term analyst view. If the Federal Reserve does eventually cut interest rates, which many economists still expect later this year, the dollar weakens and silver could move fast. Some analysts are targeting $100 to $150 per ounce in a Wave 5 breakout scenario. Now that's not a guarantee, but it tells you where the structural bulls are positioning. Now I'm not here to just give you the hype. If silver loses that $80 support level, we could see a pullback towards $73 to $75, and potentially even the 64 to 67 range in a worst-case scenario. That would be painful. The weekly MACD is also showing signs of a potential rollover, which tells us that the momentum is weakening at the macro level. That's a yellow flag. Some technical traders are even pointing to a potential breakdown from a triangle pattern toward the $50 range if bulls completely lose control. I think that's unlikely given the fundamental backdrop, but you should be aware that it's in the conversation. The bottom line on risk, watch the $80 level. If it breaks and holds below, reassess. Until then, the bull market structure is technically intact. The key insight. Remember at the start, I told you there was one thing most analysts are completely missing? Here it is. Right now, Bitcoin is rallying while gold and silver are pulling back. And a lot of traders are interpreting that as a sign that the precious metals bull market is over, that capital is rotating into crypto and leaving silver behind. I think that's the wrong read. Here's why. Silver's pullback is driven by dollar strength from geopolitical events. That's a temporary, externally driven catalyst. The structural demand story, EVs, solar, AI, tightening physical supply, none of that has changed. What we're seeing right now is a short-term sentiment shift, not a fundamental breakdown. And historically, those create some of the best entry points for patient investors. The smart money isn't panicking at $82. They're asking, is $80 going to hold? And if it does, they're buying. So here's where we land. Silver is down. Yes, the short-term momentum is bearish, but the longer-term bull case is very much intact, driven by industrial demand, supply tightening, and the eventual return of a weaker dollar. That's your line in the sand. Above it, the bull market lives. Below it, you reassess. If you want to stay ahead of moves like this, subscribe. We cover silver, gold, and broader macro markets every single week. Drop your questions in the comments below. I read every single one. And if you want to go deeper, I've linked a full silver technical analysis breakdown in the description. It's worth a read. I'll see you in the next one.